Yo, what's good guys? My name's Timmy and you guys probably saw from the title, but I'm going to show you my full strategy that made me around $45,000 in prop firm payouts in just 30 days alone. Before we get into anything, I'm no one special, I'm 19 years old, and I've been trading for around a year and 5 months. The first 7 months, I was actually down a couple $1,000s. I was going insane almost every night. I was really questioning my existence and wondering if it could actually work. Every single loss, I had the biggest self-doubt, and I just really wondered if anyone online posting was actually legit. There was a point where I genuinely thought every single trader online was a LARP just because I tried so hard and I wasn't seeing success. I realized that at the end of the day, this is a system and you need to focus on the long-term game. So it finally clicked for me and the results started to show. I made back all my losses and started pulling in consistent 5-figure months at just 19 years old. So if I can do this, anyone can do it because I'm literally a retard. Anyways, let me verify some payouts for you guys. You guys can see on Lucid. I'll go ahead and spam refresh this dashboard. You guys can see all these payouts. Here's all the certificates as you can see. You guys can also view the dates, May 11th, May 21st, May 31st, June 8th. All these payouts are within a 30-day span. Tradeify, here's all my payouts you guys can see. Lifetime payouts around 19K. This is all within a 30-day span. I'll go ahead and spam refresh this for you guys as well. You guys can see, here's all the payouts. You guys can verify this on all my social media as well. All the dates line up, everything like that. And then my funded futures, you guys can see 5/8 is the date. All of these payouts are within that 30-day span. I just want to prove that I'm not some fake guru with $0 to show from trading while selling a course. I've actually made quite a lot of money for a 19-year-old trading prop firms, and I want to teach you guys how to do it too. Before we get into the actual candlestick strategy, we need to understand, why do most traders fail? 99% of the time, it's not the trading strategy, and it's actually the trader's psychology or the fact that they have no system. Coming into each day, you guys need to have a basic set of rules. It's like your trading fundamentals. What I recommend coming into every single day, I have a daily loss limit. I set this to around 1% of my total funded account. This is like a safety net to keep you accountable, and its risk parameters to keep you safe. You guys don't want to be blowing your accounts in one day and crashing out and just losing everything. That's not how you go about it. If you lose, you walk away. Losing is a part of the game. Next, I only trade one session. I trade New York AM session only. I don't recommend trading any other session. Just stick to one thing and become the greatest at it. Number 3, how many trades do I take a day? I take around 1 to 3 trades a day max. If I take one win, I get off no matter what. If I take a small loss and I still have a bit of drawdown left within my daily loss limit, I'll allow myself to take another trade. If I take a loss and it's near my full daily loss limit, or it hits my daily loss limit, I'm off no matter what. And if I take a break even, usually I'll still allow myself to take another trade if a good setup occurs. Those are the 3 basic rules I use coming into each trading day. Now let's get into the actual candlesticks. Alright guys, what does this strategy consist of? Coming into every single day, I look for a couple things. Starting out, I need to determine my bias. How do I determine my bias? I look for key levels such as session highs and lows, high time frame highs and lows, and then also high time frame fair value gaps. Number 2, I look for a reaction off of those key levels. Usually what the market will do, will come down, sweep lows, and then get a reaction towards the other DOL. So what do I look for, guys? I look for a reaction off of the key level and then a delivery towards the other one. From there, we can look for our entry. I take 2 different types of entries. I take reversals and continuation style trades. I'll show you guys a little demo. For a reversal style trade, what do I look for? I look for a sweep of the liquidity or the key level or the DOL. It's all the same thing. What do we do here? We come up, we sweep all-time highs, get a reaction. What's my entry number 1 style? Entry number 1, I look for inversion fair value gap, just like this. And then I look for the other draws, which is London and Asia low. Also this 1 hour fair value gap. Also, we do have this low resistance liquidity leading into this. What is low resistance liquidity? This is when we have a bunch of little highs and lows stacked up, leading into a good draw, such as London low. So for this entry, we sweep this key level, get a clear reaction, we get that inversion fair value gap. Then I can take my entry with a stop loss set at the high, so it's nice and protected. And where would I set my TP? Towards the session low, which is the other key level. Entry number 2, continuation. How would I take a continuation trade? It's the same idea. Let's just say we come up, sweep all-time highs, get a clear reaction and delivery down. Let's say I don't catch that IFEG or there's no clear entry, but we still get that leg down. What do I look for? A continuation style trade. So I'm looking for a retrace and then a displacement towards that DOL, which is this London low. So in this scenario, we did get that retrace. What do I look for on this retracement leg? I'm looking for an inversion fair value gap. So let's just say we create a gap on that leg up and then we get that continuation downwards. I would take a short position off of this inversion, stop loss at the high, targeting that obvious DOL, which is the London low or the Asia low. Now, same thing for the opposite side. Let's look at the other scenario. We come down, sweep London and Asia low. What do I look for? I look for a clear reaction off of these key levels here. You guys can see we got a clear reaction. For the reversal style entry, I'll look for an inversion fair value gap just like this, taking my long position right above the IFEG close, targeting that other key level. And then for that continuation style trade, same thing. We get that sweep of the key levels, clear reaction. What do I look for? I look for a retrace just like this, and then a continuation back towards those highs. And that IFEG play would be around right here. I'd take my long position, stop loss at that swing low that we just created, and then TP, take profit, set at that next key level that we're delivering towards. Those are my two entry types. It's pretty simple, reversals or continuations. I look for the reactions off the key levels, and I determine my bias by seeing if we deliver from sweeping a key level. For example, if we sweep this all-time high here, and then get that delivery lower, my bias would be pretty bearish. Example 2, we come down, sweep the London to Asia low, get a clear reaction from that. What's my bias? I'm going to be bullish, looking for the next key level, which is that all-time high. Onto the live chart example, let's play out this scenario. What do we do on market open? We come up, we grab the all-time high. We also formed a SMT with ES. If you guys don't know what a SMT is, please do your homework. That's very important. Let's scale down to the 30-second time frame. We did form this 30-second bullish fair value gap here, and we did grab that all-time high. So now let's wait for a reaction. What do we get, guys? We got that heavy displacement, clear reaction from sweeping that high, which was a key level. At this point, I would take my short entry around there, stop loss at the high, take profit. I would target towards those London lows, just like this. Let's play out this scenario. You guys can see we ran straight to that London low. Now let's get into scenario 2, which is a continuation style trade. You guys can see we're still bearish on the day. What did we do? We got that giant displacement down. What do we just have? We just had a retrace leg. And what did I say for the continuation? We can enter off of a IFEG heading towards the other DOLs. So what did we form on this leg up? We formed this bullish fair value gap right here. If we inverse that just like this, we can take our entry, short position, stop loss at the high that we just formed. What can we target? We can target the DOLs that we're heading towards. In this scenario, Asia low is resting right here, so you can take this clean 1-to-1 to grab that low perfectly. As you guys can see, this is the reversal trade, and this is the continuation style trade right here. It's pretty simple. Let's go over some more scenarios. All right, guys, next scenario, we're going to be going over June 4th. Starting out in the 4-hour time frame, what do we see? Looking to the left, we have LRL stacked up. You guys can see low, 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 low stacked up, leading into this nice 4-hour bullish fair value gap. We did sweep all those lows. So if we get a reaction off of this, I'm going to be looking for some longs. Scaling down to the hourly time frame, what do we notice? We do have a big hourly gap resting above. Going down to the 15-minute time frame, what do we see? We do have this high leading into the gap right here. So this is going to be a good DOL for me. This is an unmitigated 1-hour gap, and this high leads straight into it. So I'd say this is a super safe TP if we find a clean long setup. Also, what do we notice on the 15-minute time frame? We are in this 15-minute bullish fair value gap. If we want to respect our bullish order flow here coming into the market open, I would like this gap to hold, get a clean displacement, and find an entry towards this high leading to this 1-hour fair value gap. Scaling down on the 30-second right before market open, let's play this out. We get that huge displacement lower. What are we doing? We're delivering into that 1-hour gap. This is also a 4-hour gap as well. We put in an SMT with ES. We did sweep out all this LRL leading into this SMT and the hourly plus 4-hour gap. We do have this bearish fair value gap right here. Playing it out, we get that clean V-shape inversion. I would take my long position right here, stop loss at the low, and take profit. I would target that 1-hour unmitigated fair value gap plus the high, which is over here to the left. And what can we go break even off of, guys? You guys need to learn to go break even. I would personally go break even off of these highs. This is all relative equal highs here. We have this high here, this high here, and this high here. I think we could potentially reject if we sweep these highs. So you guys want to eliminate potential losses. So if we come up, sweep these highs, I'm going to drag my stop loss to break even to prevent the loss if we potentially get that reversal from that sweep. Playing out this trade, you guys can see, displace higher, you would go break even off of sweeping that. And then what do? We run straight to the TP, super clean, Base hits like this pay off every single time, guys. Next scenario, let's run through it. You guys should be getting the hang of this by now. Starting out on the higher time frame. We're actually on the daily this time. Usually I like to go on the highest time frame that has the best looking PD arrays. Normally it'll be the 4 hour or the 1 hour, and I'll analyze the gaps on that. But in this scenario, on the daily time frame, we do have a daily fair value gap that we're about to tap into. So if we get a clear reaction off of this daily fair value gap tap, I will be looking for a short getting into this day. The overall trade idea, this is around a 2,000 point leg down. I would be looking for some sort of continuation, just like I showed you guys, to follow the trend just like this. Scaling down to the hourly time frame, you guys can see this right here is the high that leads into that daily fair value gap. So coming into the market open, we actually do sweep that high. So I'm looking to get a clear reaction out of that, and then a displacement towards the DOLs below. In this case, we do have London low sitting right here, and we do have Asia low way down here as well. Scaling down to the 15-minute time frame, we do have a lot of low resistance liquidity built up. I'll mark that out. You guys can see we have all these failure swing lows stacked up. It's just lows leading into that session low, which is London low. So looking at this chart, all these lows stacked up, leading this London low just looks super amazing to me, and this is a very good DOL. The Asia low is way lower. That does make the short idea stronger, but I wouldn't want to target the full move because that's like 500 points. I would really want to target for my base hits and go for one of these LRL lows or just the London low right here. You guys want to aim for more attainable lows rather than the big moves every single day, you know what I mean? That's how you get the higher win rate over a long period of time. Scaling down on the 30-second right before market open, let's play this out and see what happens. You guys can see we got that displacement. We swept this high, therefore tapping into the daily fair value gap, and then we got a clear reaction from that. We do have this 30-second bullish fair value gap right here. Playing out the next candle, we do inverse it. I would take my short position right here, stop loss at the swing high. And for take profit, looking to the left, what's the most clean TP here? I would target this swing low. It looks super obvious. You guys can see we have this low here. We have these lows here. And then we have this low right here. The London low is way lower over here, but just because it's in this direction, I think that makes my trade idea more strong, and I don't have to target the full move every time. I'd say this swing low right here looks super clean, super obvious. I like to take my obvious trades, so I would target this low here. And for a break even level, I would probably go break even off of this swing low right here, right before our TP, just in case we come down and sweep this low and then get a reaction and then continue higher. I want to prevent that potential loss, and that's the point of going break even. You guys want to prevent unnecessary losses. So once we sweep a low like this, you can drag your stop loss to break even to lessen your risk. Playing out this trade, you guys can see we do end up running straight to TP. We hit our break even line, no reaction, and then we just hit that TP perfectly. This is one of the trades I took to secure multiple payouts. Took this in the live markets, and it's just proof that this stuff works. You guys can see I started on the higher time frame, did my analysis, we tapped into that daily gap. We swept that hourly high. We got a clear reaction from it. We got that displacement downwards on market open. We got the inversion fair value gap. And guess what? We have an obvious draw on liquidity to the left. We have a good break even level. It's just a great thing to see, and stuff like this happens nearly every day. So there's so many great trade ideas that people miss, and I just want you guys to learn how I trade. Next up, I'm going over this day, which is an interesting day. I did catch a continuation short style trade on this day. I'm going to teach you guys about short-term and long-term bias. So coming into this day, we do have really good DLs above. You guys can see my indicator marks this out. We have all-time highs, previous day high, and London high all stacked up. We also do have Asia low resting below, and just looking at the 5-minute chart, we are just trending lower. We have a bunch of low resistance liquidity leading into this Asia low. So really, I could see us going both ways. I can see us displacing down and heading towards Asia low, or I can see us respecting bullish PD arrays and just trend straight and grab all these highs resting above. I'm going to show you guys the if this then that statement. This is when we have two conflicting PD arrays. So in this scenario, we have this 1 hour bearish gap right above, and right below, we have this 1 hour bullish gap as well. There's really two scenarios that can happen here. Scenario one, we come down, tap the hourly bullish gap, and then just trend towards all these highs resting above right here. Scenario two, we tap this hourly gap, respect it, displace down towards all the DOLs to the left, like the LRL and the Asia low. So in this type of situation, I'm not really predicting, and I'm reacting off of what the market gives me. I call this the if this then that scenario, and I don't overthink it too much. I just wait for a reaction and a displacement towards the obvious DOL, and then I'll find a clean entry and then go from there. Scaling down to the 5-minute time frame, we did edge all these highs resting above, and we have low resistance leading into it, but we did get this giant displacement leg down. This is around 200 points. So getting into this New York Open, I'm really looking to continue this displacement displacement and follow the bearish trend downwards. But just the fact that these DOLs are so nice, I will expect this to get hit later in the day. Just right now, getting the market open, I really want to see us continue lower. Scaling down to the 1 minute, let's play out market open. You guys can see heavy displacement down. We displace around 80 to 90 points to the downside. For me, there's no clear entry in this situation. So either I'm going to wait for a V-shaped reversal to the upside, or I'm going to look for a continuation short to continue lower. And usually when the market displaces over 100 points on open, with my experience, I'd say we continue in that direction until one of the main DOLs is hit. Continuing this, we do end up getting a retrace and then a displacement down. Personally, I don't really see any entries here. Letting the market play out a little bit more, we do end up getting another retrace. If we want to swap to bullish here, I want to see a change in state of delivery, at least a closure above this high, just for more confirmation, because you guys really don't want to be taking pattern trade IFEGs. Like, I just know a lot of people would take this IFEG. There's just not a lot of confirmation behind it. We didn't really take out any key levels. We did sweep this low, but in my opinion, that's just not enough. I would want to see that closure above this high just to support the change in structure. On this leg up, we did form this bullish gap here, and if we really are going to continue to be bearish and head towards that Asia low below, I would like to see us inverse this gap. That's exactly what happened. What would I do here? I would take my short position, stop loss at the high. This is a well protected stop loss. And for my take profit, we do have this Asia low way down here, but like I always say, this is 150 points below. The odds that a trade like this plays out all the time is pretty low, so I would just aim for a trade in this direction, aiming for around 2R to 1R. So aiming for 1R here in this situation, it would look like this. And a clean break even level, what can we go break even off of here? We could go break even off of this low, just resting right here. So once we sweep this, we can drag our stop loss to break even and be completely risk free on the trade. Once you go break even, you almost have nothing to worry about because it's either you win or you go break even. There's no loss in that situation. Playing this out, you guys can see straight to the break even line. And then what do? We just flush all the way down. If you aim for 2R, this also would have hit. But if you aimed any further than that, you would have gotten edged so hard and gotten break even on this trade. Stuff like this is why I don't like to always target the full move, and I like to just secure my piece of the pie. I like to secure my profits and move on to the next trading days, because going for these full moves statistically just isn't worth it versus going for a 2R to 1R trade with a way higher win rate just like this. And I'm going to show you guys going on the 15-minute time frame. I said I was short-term bearish, long-term bullish. Let's play that out and show you what happened here. You guys can see we actually did end up coming and grabbing all those stacked up highs. So my prediction was correct. Short-term bearish leading into that long-term bullish. This is proof that even if your bias isn't like the correct one for the rest of the day, you can still secure profit on the day. But yeah, guys, this is how I secured around an 18 to 19 day winning streak, and it secured me over $47,000 in payouts. I'll refresh that page for you guys. You guys can see. Let me refresh. You guys can see around 18 to 19 winning days. Also, some days we're on some evals, all that. But this is exactly how I trade, and this is how I secured $45,000 in prop firm payouts in 30 days, and I'm just 19. So if I can do it trading this simple, then you guys 100% can too. And if you guys want a tool that helps out your trading, I'm just now launching this indicator. It's what I personally use. It's basically how I trade summed up into one indicator. It has all the important ICT concepts you could ever need. You guys can see on the screen, it marks out all the relevant highs, relevant lows. It marks out the low resistance liquidity. It marks out relevant high time frame fair value gaps. It marks out live SMT detection, and playing out the chart, it marks out relevant fair value gaps just like this. You guys can see this fair value gap was created here, and then we end up holding that, continuing higher. Just like that. Once we sweep liquidity, it disappears and it updates, putting in live SMTs and updating all-time highs, everything like that. But I just wanted to make a tool that assists people and helps people learn, because it still even helps me, because sometimes there's a fair value gap, sometimes there's a SMT, and sometimes there's a high that you just don't see when you're doing your analysis. So it's something good to have in the background to support your trading. So if you guys want to check that out, it'll be in the description. And I always say this, but if you guys haven't already, feel free to join my free Discord community. I'm trying to build the #1 community of all time in the prop firm space. We have a daily P&L section. You guys can post all your good trades in here every day. We have a testimonial section. You guys can post your payouts, you can post your achievements, anything like that. And then also you guys can see I have a prop firm section. You guys can get the best deals on every top prop firm in the whole space. And with that, I host weekly giveaways. So if you guys use code Timmy on any prop firm, make sure you submit your entries on my website. I give away around 20 to 30 accounts every single week to random people. You guys could scroll through the giveaway proof. Here's all winners of these people using free accounts, all from using code Timmy, by the way. So if you guys want a quick rundown, go on join the giveaways. You could read all the rules here, and then you click submit your entries. This will bring you to my website. You connect your Discord, and once it's connected, you can see all the prop firms below. Any account you bought with my code during that set week, make sure you click on that prop firm, follow the rules, put in your order number, and submit your entries. And I'm choosing 20 to 30 winners every single week. So if you guys want to participate in that, I thought that'd be something that's pretty cool to give back to the community because I appreciate all of you a lot. But yeah, I hope you guys really learned from this video. My goal is just to teach you guys that trading doesn't have to be complex. It doesn't have to be crazy, overcomplicated. I want to keep it simple. And also I just want to build my community, have the #1 community that we could all share our trades and just become better traders together. Peace out, guys.